Good morning, everyone. Today is the 27th of March. It's going to be the last week of the first quarter, so that one can bring some volatility in the market, especially by the end of the end of the month. On the 31st of March is going to be next Friday. So expect some volatility in there. Maybe some portfolio managers, some big investors adjusting their own portfolios on that by the end of this week, and after everything that has occurred last week with all the banking meetings and interest rate decisions that were announced last week. So welcome everyone. My name is Pedro, and I'm the senior market analyst at Alphachain. So, and this is another weekly market analysis. So what happened last week, right? So of course, the big elephant in the room, it was the FOMC meeting and what the Fed Chair Powell would say and announce in terms of the hikes, and then in the commentary as well. The main difference was, since we last heard from him, it was 2 weeks before when he attended Congress for those 2 days. The problem was that after that, we had all the chaos happening in the banking system in the US, with the SEV, for example, going under, and so many other issues going on. And it was the first time that we would hear from him at the same time that we would see him making a decision based on the interest rate. And he did what it was expected. It was at 25 basis points. Actually, in between those 2 weeks, there was a lot of changes in what the market was pricing in. Before that, it was 50 basis points. Then it was 25. There was even the consideration of maybe just staying as it was at 4.75, the interest rate. But it was 25 basis points. So we are at this point at 5%. And that was eventually what the market was pricing in. Question mark was then, what would he say and what kind of guidelines would he give for the next meetings? He also, in that press conference, he did the dot plot forecast. Basically, he shared 4 charts with us, paying attention to the real GDP, where the Fed is expecting to see the GDP by the end for the next couple of years, in 2023, 2024, and 2025. So to go to be between 0 to 1% this year, and then to start to grow a little bit in 2024, and by 2025 to be close to 2% growth in GDP. He also shared the unemployment rate. This is one that we have been waiting and try to see, because without these hikes in interest rates, one of the consequences or natural consequences will be to see an increase in unemployment rate. And basically is expecting, or the projection at this point is around 3.4% unemployment, which has been at the lowest for many decades, and is looking to bring it way above 4%, almost even close to 5%, and to stay there for 2024 and 2025 as well. So this has been one of the most important data points that we have been trying to see, the non-farm payroll, or the unemployment claims that comes out every Thursday. And actually, if you haven't noticed yet, in the Forex Factory website, the unemployment claims used to be an orange in terms of how relevant the news was, and now it's a red one. So you can see that just changed as well, how important that data is going to be, because it's going to be one of the first indications that we may see the unemployment increase. So this is what he projects for the employment, and then the inflation. Pay attention as well to the inflation that he pays attention to. It is the PCE, not just the CPI, but actually the PCE inflation. And he's looking to actually see a big reduction in here, all the way below, between 4 to 3% by the end of this year, and eventually reaching the target that he's looking for by 2025, and getting closer in 2024, which is the target, of course, as we know, the 2% target in there, right? And then by the end But was the prediction? It was based on interest rate, like where it should be by the end of the year and in the next following years. And at this point is at 5%. There may be still the consideration of looking to be slightly above 5%. So maybe you could see another 25 basis point hike, and that's then where the main difference goes between what the Fed is saying and what the market is pricing in, right? Because the market is already pricing in rate cuts after summer, mostly also by the end of in the last quarter of the year, and the Fed may not be thinking that way. And this is where you can take a look at the CME Fed Watch tool, because at this point, for example, if you consider the next meeting on 3rd of May, there you go, another. Actually, at this point, there's high percentage of chance of just continue to be at rate that it is now. So no more hikes, to stay at 5%, with 30% chance of the market pricing in at 25 basis points. We know, and we have seen that during the last 2 weeks, how quickly this can change, especially if there's any more turmoils in the banking system or any other sector that may start to show any issues in there. At the same point, if the inflation by any chance doesn't go down as expected, that can also influence how the market is going to be pricing in and what the Fed will do. But mostly what I wanted to show is by the end of the year, as you can see, basically the market is already pricing in 40% chance of being at 4.5. This is at least a 50 basis point cut or even a 75 basis point cut by the end of the year. And this is the big difference, right? So by the end of the year, at this point, 40% chance of being at 4.25. And that shows at 75 basis point rate cut, which the Fed hasn't really mentioned that whatsoever. It's going to be interesting as well to see now the next commentary or anytime anyone from the Fed comments on this topic. So this is another good example of what we have seen, right? Where the inflation has been when it was all the way at the peak back in November, October, if I'm not mistaken, and it has been managing to bring it down. And this is, on the other hand, the hikes that we have seen, right? At this point, 5%, CPI at 6%, and core CPI at 5.5. So it's getting closer to being here. Now the question mark is going to be, is the Fed actually winning this battle or not? Or are we going to see another hike in the inflation? For example, like it just happened in the UK, there was a spike in the CPI data coming out in the UK, which was not really expected. So let's see how the inflation is going to be in the next few months in here. But yes, one of the main points, of course, during the FOMC meeting, it was regarding price stability or financial stability. From his commentary, he did mention that maybe at this point, it may not be necessary to keep increasing rates. However, there is other ways to kind of tightening the market in terms of providing or not providing liquidity into the market. Like there's other type of policies that the Fed can implement without aside from increasing the interest rates. So because he wants, his main battle is still the inflation, and that's what it matters in the year. On the other hand, during that FOMC meeting, we had Janet Yellen also making some commentaries that scared the market a little bit last Wednesday, not really ensuring the covering of deposits or whatnot into the financial system. There have been a lot of meetings going on with the Fed regarding this financial instability in the banking system. So let's see as well what's going to happen in the near future in there, and how is that kind of being contagious into the rest of the world. We had Credit Suisse last week. We had last Friday Deutsche Bank as well, scaring the market a little bit. At a certain point, it was the stock market was minus 14% for the session. Yes, everyone is sensitive. Everyone is being scared a little bit with any contagious of all this that has been going on in the market. We had also Bank of England announcing a 25 basis point, which was expected, and with the main focus, as I mentioned, with the CPI that came out much higher than expected, at this point at 10.4%, with the core CPI at 6.2, when it was expected to be below the two-digit number. Apparently, it's still higher. And we also had the Swiss National Bank announcing a 50 basis points hike with how the situation in the Credit Suisse in there. Unemployment claims is still strong, so it's still a good data in there. As I mentioned, as you can see now, it's a red event, important it is at this point. And then last Friday we had full data of PMI around the Euro, UK, and US, showing really strained services PMI across the different countries, with manufacturing as well getting a little bit better, even though it's still below 50, right? And the data was a reminder that US economy is still strong, even though the recent bank stress has started to weigh on the outlook. And this is basically what happened last week. This week is going to be a little bit slower in terms of macro data. Let's just take a look into it. We have, by the way, paying attention that we had the hours, daylight saving time shift in the Euro area, in the UK and Switzerland as well. So we are back to the normal schedule, comparing with the US Open closing and the timing of the date of the news. So it's 1:30 p.m. now UK time, closing the opening at 2:30 and the closing at around 10 p.m. UK time. So yes, so what we have, nothing much this week. We had a few commentary, Christine Lagarde as well. She made a few commentary, she spoke a few times last week as well, after the ECB press conference, kind of still showing trust in the banking system in the Eurozone. Also announcing if anything happens, they have programs in place to help the banks in there. We have consumer confidence on Tuesday, and then we have what else? CPI in the Eurozone starting to appear, final GDP in the US, and that's basically it in terms of the news events. So there's not exactly a big catalyst. However, of the situation that we are, expect some volatility. Also, by being the last week of the quarter and of the month, expect some volatility as well. So looking at the market, how has the market reacted to all this situation? We saw a little bit as expected. If you watch the previous weekly market analysis that we did last Monday, we were indeed expecting the dollar to move to the downside in here, to continue to feel this price in here, to go below these lows, and this would be one of the levels to pay attention to in there, right? So this will be one of the situations of reacting from this demand zone. And now let's see if price by any chance is going to continue to move higher from here, or if we're going to respect this previous level of support resistance, and maybe price can start going down once again. So this level in here, it's important to see how price is going to behave. But this was a key level that you're looking for. Another one, it could be just a little bit underneath, if that was the case. But so far, so we saw dollar going down. This was during the FOMC and then the reversal. And just as we talked about that, usually the reverse happens just the day after and not exactly during the meeting. It may take one day to adjust and then price to turn. So again, bigger picture, if you still remember, we did broke these highs with this move in here. So okay. So yes, we did broke that. We did broke this size in here, which can still read a little bit for the potential or for the possibility of seeing the dollar actually eventually to continue to move higher. Let's see if it's going to be from this level or if price does want to go maybe a little bit lower than that. There's maybe still now a few zones in here that the dollar can still react from. So let's see what kind of move we are going to have in here. Then we have the indices, right? So we had a move to the upside and then a move to the downside and kind of still a little bit in between. We have seen the much more strength on the Nasdaq comparing with the other ones. Let's actually take a look into here. So we have S&P in here. Remember that we had respected this level in here initially, and we are still reacting from this zone in here. And at this point, we are reacting or respecting this level, but this one looks like a little bit in the middle in here. So let's see if by any chance price breaks this level, maybe have the potential to continue to go a little bit higher, or if we go, maybe we can just respect this level and maybe continue to move to the downside. So we are in between this level. Let's see what price is going to do. Nevertheless, eventually I could still see the potential of price going there. But the main point that we can see is that finally we have Nasdaq reacting exactly from the same level that S&P was reacting to, which is this high in August, on the 26th of August, a zone that price Nasdaq hasn't really reacted to before, and it reacted from this week. Initially, Nasdaq had just taken this high, and there was still spice in there, and Nasdaq finally did that. Maybe that's one of the reasons as well. Just talking in terms of price action and what you can see in the chart. I could see a little bit more bullishness on the Nasdaq, as I mentioned before, comparing with what S&P could do, or even the Dow could or needs to do. And this is what you're talking about, right? So we have finally NAS reacting from this level in here. It was during the FOMC meeting. Again, similar to S&P, maybe there's still a chance of price to go and react a little bit higher towards that level, exactly the highs from August. But there you go. Because before that, if you remember, we had just taken this. We had taken those highs, so I was looking still for price to go a little bit higher. Nevertheless, we actually just fake out these ones in here. So let's see now. The price is happy with where it is. I would like to see at least this low being broken, if by any chance you want to see this happening. We are creating this good kind of zone in here of trend line. But yes, I would like to see at least this low or some kind of lows in here being broken to actually start opening the door to go further down. Otherwise, we may just continue this compression and we may spike above this level towards that zone, and it may go down after that, because we do have kind of all this zone in here that price can eventually go to in there. So opening to that scenario, we are literally kind of trading within this range. This was a really nice one that price respected. So let's see if we are going to have this or by any chance just continue to go higher. But yes, big thing to look at is that yes, Nasdaq has been much stronger in this bullishness than S&P, for example. And then we have also Dow, right? Dow has been moving it's been in this range, in between this level. As you can see, we never really managed to break this level. We finally reached that zone that we were looking for in the past. So this is the key level to look for. Are we going to, by any chance, respect this and continue to go down, or are we going to eventually break this and continue to go higher in here? Price reached that target that we've been talking about for the last few months. Nevertheless, there's maybe still more room to the downside that we could see, but for now it needs to break this high. And then you have DAX. DAX is another one that we have been looking for, predicted quite nicely the reversal in here all the way to the downside. So we are kind of trading in between this level. Price respected quite nicely this demand zone in alignment with this kind of previous level of support resistance zone, and now we are in the middle. So when you are in the middle, price can do a little bit of everything that it wants, and there's maybe even a little bit more of space in here that price could go to. Price could go even higher. We'll see what the DAX is going to do. We're going to just resume the move to downside. Yeah, I do like where this all reacted from. Of course, there's maybe the chance that price could eventually go all the way through this level, but I'm okay so far where that level reacted from in there. And this is what you can see for the indices. Another one that we pay attention to is the Euro Index, and again, respected quite nicely still this level in here. We kind of managed to break these lows. So yeah, I mentioned that I was still looking for price to go eventually all the way till here, as this one kind of is a little bit of a move to the downside. So yes, let's see if by any chance we're going to continue to have that or not. One of these two levels needs to break either above the highs or kind of below these lows in here. Somewhere in here also can be a good level for price to move from. But yes, it was a big sell-off last Friday on the euro. In the end, really nice. Nice fake out now of the highs after respecting this demand zone. Price went all the way through, and now fake out. And now it took this highs in here where to all the way till there. There's maybe still a chance for price to go a little bit higher. Maybe can draw some kind of trend line as well to try to find out when you could maybe expect that level to be taken. It depends on where you want to draw that trend line from, or pay attention also to this zone in here to see when if price by any chance kind of just respects this and continues to go higher, or if it wants to turn. But we were looking for that as well, the turn on the dollar yen, for example, now to start looking to the upside. So that's what we have here on the indices. Let's take a look at the individual assets at this point. So this is what we have on the euro. Again, this was the level that we were looking for. Nice reaction from that zone in the bigger picture. This was the previous level that price reacted from during the NFP last February, and price reacted quite nicely from there the day after the FOMC. So this was FOMC. Price went a little bit higher the day after, and then kind of it's just sell off, and maybe open the door for price to go all the way through the walls. So let's see if that weakness on the euro is going to continue, or by any chance if there's anything in here that price can hold to the upside. So yes, we are literally trading still within this range in there. So let's see what's going to happen next on the euro in here. Then we have pound, which has been moving quite similarly as well. So nice reaction from that level, and we are now reacting from these lows. So we kind of feel this space in here. This was a good engulf down, showing the indication that most likely price would like to go down. Nice reaction from this level, and price kind of reached now this demand zone that was still fresh, kind of continuing it like this. It's going to be interesting to see how price is going to behave from here. If it kind of holds it, maybe it can go down. If it may breaks above it, maybe we go and maybe react a little bit higher, maybe before a turn to the downside. So it's curious to see how price is going to eventually behave around those highs on the pound. Aussie, it's another one. It managed to respect this level that we had in here, This is kind of the range that we have been trading in between. We did manage to break those lows on the left side, right? So there's maybe a little bit more room to the downside after breaking it and not really touching the next level of support resistance, which is a little bit underneath it. So we are within this level. This price perspective is extreme. It's going to be interesting to see what next. We do have this previous level in here. Price just respected it. So let's see what's going to happen next on the Aussie. But I would have preferred to, if I had seen this level in here being broken to the upside, I may have turned a little bit more bullish or attempt to look for longs maybe somewhere at these lows. But you haven't really managed to break this level, even on the higher time frame. It's kind of still literally within this range. So let's see if by any chance price is going to respect anything in here and turn, or are you going to just continue eventually to move down and create new lows before maybe a turn to the upside. So let's see. And if you do break again below these lows, maybe there's a chance to go all the way until here on the Aussie. And yen, right? Yen that is turning, and there you go. This was another level that you're looking for price to take this low, and after that starting to turn. Nevertheless, eventually we do have still maybe a demand zone a little bit underneath that, but this was a nice zone, right? Taking this low in here, it's really good compression on the way down. You could have maybe drawn at some kind of trend line, and after that maybe attempt to look for the longs. Of course, breaking this high can be, it is an important level that can maybe open doors a little bit more higher, and then maybe price can go even here. Even though this one maybe had already broken this trend line, so there's even a chance that eventually price could go all the way to that level in there. So we are in this interesting zone on the yen. We had basically kind of in between this level. Nice reaction all the way through. We are not really reacting from the lows yet, so this may be seen still as an engulf down. Price can actually may go a little bit towards that level. We'll see what's going to happen on the yen, and the remaining of the yen pairs as well, moving quite in a similar way. A little bit more aggressive, for example, the euro yen, just because of what's going on as well on the euro zone. That's why we are seeing sharper moves in here on euro yen or even pound yen, for example. And then you have CAD. CAD is another one that we're looking for price to react from here. Some of our traders managed to get really good entry at that low. And we had out this move, right? So CAD has been moving to the upside. It reacted quite nicely from this level, and then it since we broke this high, maybe there's even a chance that price eventually could go a little bit higher, right? This was kind of the demand zone that made out this move to the upside. So this is an important level. We may have this happening, maybe price attempting to go slightly higher before maybe moving to the downside. If you do break kind of below this level, that may open the door for price actually to then maybe go all the way until here. So we'll see what CAD's going to do. For now, if this level keeps holding, maybe we do have that continuation to the upside in here. Dollar franc Swiss, it's another one that you're still looking at it. Bigger picture. There's maybe a little bit more of a room to the upside before maybe continue the move to the downside. There you go. So bigger picture, maybe still bearish. The medium term, I would like maybe to see a little bit of a retracement, a move to the upside before maybe the continuation to the downside. Are we in a good level to look for that move? Maybe we are. Maybe price can go even a little bit lower before doing that. But as long as kind of these lows keep holding, and if there's good opportunity in there, maybe there's a good attempt to look for a long in here. We did manage to break this high. There's maybe more room to the upside as well. But yeah, paying attention to how price is going to react, maybe closer to these lows. Yep, so that can be interesting in there. Then we have gold, right? Gold has been on the rise. It was a really nice reaction from that level. We are getting, from this level, sorry, that has been a long time ago. We managed to take this, not this, just this one in here, which was a super good level to look actually for a sell after you take that. That's kind of a tip. If you want to, just pay attention to highs in a higher time frame, and then just see price kind of taking those highs, especially with this kind of this weekend here, and then kind of moving to the downside after that. Around these levels can be a really good level to look for a big reversal in the market. So price did that. Price took that high, it reversed, and then it reacted straight away from the next demand zone, right? From this level. Now the question mark, it will be that one, right? So which level now price is going to break to? Is it going to kind of break above this higher, continue, or is it going to hold it and now maybe moving to the downside? It did broke slightly these lows, but yes, that could have been a natural target from the first sell. And now maybe now price is ready after taking this demand in here, making this weaker. Maybe price can be and look for further move to the downside. So it was a really nice reaction, kind of a good double top being created. There's ways to trade double tops, and there's another ways to not trade double tops. But yes, this was a good one in here. So maybe you have a little bit of a retracement after price touching this 2K mark on gold. Maybe you're going to have a really bit of a correction, but of course this level is still important. So if this keeps holding, maybe there's a continuation to the upside. So let's see what's going to happen. We do have this double top in here, which can be a little bit of a concern in there. But after taking this level, it's a good level to look for a good reaction, as it happened last Monday. Also to pay attention to is oil, right? We had a big sell-off on oil last couple of weeks. Price now reacted quite nicely from this demand zone. It's basically one of the last lows that made out that move to the upside from here. If we do break below this level, maybe all of it or almost all of it looks like compressed and may open the door for price to go maybe below this 57 mark. In here. On the other hand, we did have the good reaction from that level, but now the next target, it was a little bit obvious. It could be this previous level support resistance, or then eventually to retest kind of this level in here. With a few levels in there as well to can see some reaction. But yes, we may create a new range after spending these last 3 months within this level at around $82 to $270. Now we expanded, we created a new lower range at around 64. And yeah, let's see if price by any chance doesn't want to retest those $80 mark in there. So we have a few levels, as I mentioned. First of all, it will be something in here. We already reacted a little bit from there. And then as price is evolving a little bit higher, eventually it could be somewhere in here, right? But again, this level needs to be broken first before even attempting to go higher in there. So let's see what's going to happen as well on oil for the next week. And then looking a little bit at the crypto and what we have in here. So we have BTC that went all the way to test this really important level of support resistance around really close to 29K, 28 something. It's really got close to the 29, which is also previous level of support all the way back since the summer 2021, right? So we are at this level. This is a really important level. This for me personally, it's one of the key zones to see if by any chance price actually turns completely bullish, or if it still kind of holds this level. I'm still not going to be 100% bullish at this point on Ethereum. Just looking on BTC, just looking literally at this price action on the chart. This was a really important level that just managed to break out these lows. So it's important. Price is consolidating at this point. Let's see to which direction is it going to break. We do have this previous level of resistance, and this level in here can literally still hold price to go higher. If we do break below this level, I think we may open doors to go much farther down. We already even broken this low in here, so it's going to be interesting to see if we do break below this level, what's going to happen next. But this level in here for me is quite important. Looking at the chart in there. So let's see. Still respecting these lows. Yeah, it's going to be interesting to see what's going to happen in here. And Ethereum, I think it's moving quite similarly. Managed to break also these lows in here. We are reacting from that level that we talked about for a few weeks ago, when price was still kind of trading in between this level. I mentioned that I would like to see price going higher above this highs and reacting somewhere in here on the daily time frame. It was a really good a good level in there. We are reacting from it. We already even spiked it a little bit, which was nice to take the liquidity from all this triple top. And let's see, we still didn't manage to break this low. So we are still kind of within this range. So that kind of still keeps it safe in there. Let's see which direction price is going to break in here. But yes, nice reaction from that level. Eventually price can still go there. And yeah, finally Bitcoin kind of is reacting from this range, because Ethereum went all the way there last summer in August, while Bitcoin kind of stayed always a little bit farther below that level, and now it's reacting from that same range that is that 28, 29, 30K mark on BTC. So let's see what's going to happen. We are literally within this range. A little bit of indecision. Are you going to manage to break through to the upside, or are you going to just eventually start to move down with the sellers taking control in here? So again, not exactly any big macro data coming next week. However, it's the end of the quarter. Expect some volatility and all the situation that is going on with the banking system and everything else. There's going to be enough liquidity to take advantage of this week. With that being said, thank you very much, guys. I hope you have a great week ahead, and I'll see you next Monday. Thank you. Bye-bye.